It's time. It's time to short Bitcoin. I'm already short on Bitcoin, and today I'm going to show you how to manage your risk like a professional in a business like manner, in a way that even if we're wrong, we're still likely to make profits. And if you can do this consistently, you will win in the game of crypto trading. So if you like today's content, like, subscribe, hit the bell notification, and let's dive straight into Bitcoin. So we did a video on Bitcoin a few days ago, Bitcoin emergency update. There's good news and there's bad news. And pretty much it's played out almost exactly as anticipated, with high probability. What we basically said, the good news was short term, we're likely going to see some short term upward movement, especially with the momentum being upwards, short term momentum. That just measures the rate of change. But then long term or medium term at least, we anticipate a movement to the downside, which was the bad news. And it looks like it's playing out that way. And we've looked at taking a short trade setup here, and it seems to be here at the moment. So we're going to dive into a bit more detail over here. But with everything that I do to date, if you want access to my charts, I've just launched the R15 Crypto Gym. You can get access to my exact Bitcoin charts. But better than that, we do a daily Bitcoin workout where we literally go into detail. And it looks something like this. It's called the R15 Crypto Gym. And I literally break it down for you in terms of momentum, pattern price, and the details of how it's playing out, what's likely to occur, and high probability setups. And there's a lot of goodies. £1 and you'll get a 30-day trial now. We're doing a 30-day trial in the gym, so it's pretty phenomenal. So let's now just jump into the chart of Bitcoin and just look at this from an objective standpoint. Now, there's always a lot of noise with Bitcoin, right? It's one of these things with crypto, the news, the fear, uncertainty, and doubt. So we're just going to put that aside and look at the pure technical position right now and the high probability outcomes. What can we see? And as a reminder, we want to use the information at hand, right? And we've got this momentum indicator at the bottom. So I've just made it bigger over here. It's called the stochastics RSI. It's a blue line and a red line. And there's thousands of indicators, but one of my favorites by far is the stochastics RSI because it's very visual, very easy to read. And the basic premise is it measures the rate of change, right? The rate of change. And when the blue line is below the red at this top part, what we want to see is, does it marry up with price? And if it does, it gives us a clue that we're going to see sideways to down. Does the bottom marry up with price? If it does, it's going to give us a clue that it's sideways to up. But if we can combine that with Elliott wave theory and Fibonacci price, it's a really, really powerful methodology. And by the way, in the R15 Crypto Gym, £1 trial for 30 days, you'll love it. I got a 7-day boot camp as well. And in the boot camp, you'll get like loads of training on some of my best lessons on Elliott wave, Fibonacci theory, just some of the core fundamentals that you want to be aware of when you're looking at the markets. So you don't want to be looking at it in the eyes of fundamentals, technicals, especially short term, less than a year. It's much more powerful. So when we look at this, keep it really, really simple. In layman's terms, we go, okay, blue line went below the red, it was a high. The blue line went above the red, it was a low. And we can see it almost follows perfectly with the momentum, right? We can see that pretty clearly. So what's the reason for going short? Well, first of all, what we anticipated in the video that we did on the 28th was that we're going to likely see this high be exceeded and potentially to this zone over here. What do we see? What do we actually see? We did see that the price got exceeded, the high got exceeded, but not to any major degree. It just poked its head above the high, but then we had a bearish momentum reversal. In other words, the blue line went below the red, which indicates to us that we've probably seen a local top. So now we're only looking at short trades. So there's a few different things when you're coming to trading. One of them is entry strategies. One of the simple ones that I like to use is after the bearish reversal, so we've got the blue line going below the red, go short on a 1-bar low. Basically meaning that we put an order in over here, and if the market goes below this point, we get triggered and we put a stop loss above the last swing high. So the way to really think about this is no one knows what's going to happen. I don't care how good a trader you are, if you're the best in the world, no one knows. We can only stack the odds in our favor and become the casino. And when you can get that thinking to know that you don't know, then all of a sudden you reach the professional level, because then we can have proper risk management. And that's what I'm going to talk about today, risk management, minimizing your capital exposure. That should be our first focus. So what we're going to do is the following, right? There's two outcomes that are going to play out, pretty much, right? And right now, we don't know which one. And it's important to know we don't know which one. Outcome number one is, this is our insurance thinking, we're only going to get some type of correction. And then we're going to see Bitcoin continue to the upside and break this high, right? So we want to take that into consideration, that that is an absolute possibility. We want to give the market enough space to play out. And then we want to take some profits in this scenario, assuming that this is going to happen. So therefore, basically, we're going to minimize our risk and potentially guarantee some profits, even if we're wrong. That is the real science and the art of trading. If you're wrong and the market does this, but you make profits, that is just phenomenal. However, if we're right and the market does this, this is the second type of thinking, which is we're going to do both, is that the market does do this, makes a new low below this low over here, and is down in this region over here. We need to have that in play as well. So this is why I use something called a 2-unit trade strategy. The first unit is half your position, and it's your insurance position. Assume that Bitcoin is only going to make a correction, 1, 2, 3, ABC, and we take some profits over here. And then the second half, we keep the stop loss over here and let the market have loads of room to unfold. And we're anticipating a potential move similar to what we saw prior, what was it, but July, June, maybe April, May, when we had this big movement to the downside. That's the science and art of trading. And that's it. We're keeping it nice and simple. So what's the two expectations? If we're wrong, the market to only go into this zone over here because of some Fibonacci price and time zones. So we've got this area of minimum expectation. And then if we're right, it's down here. We've got something called a Fibonacci external retracement. It's a particular relationship between a correction and the continuation. And it's typically in this zone down here. So we want to be aware of that. And by the way, in the R15 Crypto Gym, you get some good training in the bootcamp. If you like what you see and everything else, I've put some more advanced training and you're going to have some access to it as well, which you can upgrade to as well. So Bitcoin, right? We're short Bitcoin. We're very early. Actually, I'm going to share one more thing with you. It's not really a secret. Well, it's kind of a secret because no one really knows this or really applies this. If we look at how long did the former swings take in terms of time, how many days on average did this take to come down from here to here? And even the last one prior to that, how long did it take from here to here? And then let's also look at something else, because this is really powerful. Pretty simple as well once you know how to do it. If we also look at this low to this low, how long did that take? And then this low to this low, how long did that take? And then we project them forward. We project it forward. So I'm just going to line this up. We're going to project this one forward. We're going to line it up. We're going to project these forward from over here. We're going to project this one forward from over here. And we're going to project this one forward from over here. This is basically what these red lines are. You see these red lines that are vertical? These are Fibonacci time ratios, but it's based on the rhythm of the market. These are how long has it taken and how long has it been from here to here and here to here. Now, all of a sudden, we have a time zone. Now, this is very powerful information because what it allows you to do is say, when we're looking at the odds of how long is Bitcoin going to move as a minimum, sideways to down, well, we've got a date. You got a date. What's the date? It's this red line over here. So if you look at the bottom, it says the 4th of August. So that means I've got nothing to do until the 4th of August at the earliest. So I'm just going to allow it to move sideways to down. Doesn't mean it's going to. It just means it's highly probable. And also look at the momentum. I'm just going to give it some space to become oversold. Let it go below the 25 into this range over here. And if it does, then to review the trade, lock in some profits, manage our risk, get risk-free if possible in a logical, mechanical way, not rushing it, and then give the second half of the position lots of room. Lots of room for what? Well, let me show you, because again, I'm just showing you some of the nuances that you want to really adopt to maximize your chances of winning. I want to be in the trade for trends like this. It's a pretty big move to the downside. So therefore, we must be in the position for a potential move like this. But we can mitigate our risk and become risk-free in this region in the next 2, 3, 4 days, potentially. And if we can, and then we can look to add to our position on the downside over here. So it's reasonably technical today, right? Reasonably technical, but to keep it really, really, really simple, Bitcoin is looking bearish, mainly because the weekly momentum, if I just dive out of this chart into the top left, and by the way, if you want all these settings exactly as they are, when you join the R15 Crypto Gym, £1 for 30 days, £1 trial for 30 days, when you click on crypto charts and you click on Bitcoin, you'll get the exact chart that I'm doing the analysis on, the exact Elliott waves, the stochastics RSI settings, the Fibonacci ratios, and you'll get some other goodies as well in terms of Polygon, Ethereum Classic, Ethereum, Binance Coin, Solana's below here as well. So just a few goodies for you. So I'm just going to show you this. I want to just get this real clear point across. I think I showed this to you in another video, but just to re-emphasize this. If we look at when the weekly momentum, when the blue line went below the red, look what happened the last time that happened. And then what happened over the coming weeks? Sideways to down, right? Well, what do we have right now? Well, the blue line's gone below the red. So we can anticipate we're probably going to see a local top that's going to be sideways to down for possibly a few weeks. And we want to be really, really on high alert for that. Really, really high alert. And then when that coincides on the daily chart, top right-hand corner, with the next bearish reversal, that alone is called a double time frame momentum setup, where the weekly momentum is pointing down, and then the next daily momentum pointing down stacks the odds in your favor. It's almost like you're at the casino and you're doing card counting and stacking the odds in your favor before placing any bet. But then we look at the pattern structure, overlapping waves. We have some Fibonacci ratios, and now it's like, all right, sideways to down for quite a few days. A minimum hit, and then what we expect is down here. Now, all of a sudden, we have a nice business plan to short Bitcoin. What I want to finish on is a bit of optimism based on technicals. So what I anticipate will happen, there's a bit of forecasting now, but I think you'll enjoy this and find it very, very valuable. I'm just going to really zoom out of Bitcoin, right? Really, really zoom out to get rid of the momentum indicator and just look at the chart pattern. And what I want to emphasize is Bitcoin is looking like it's doing an ABC correction, right? And we're probably going to see the correction finish somewhere down here, right? More than likely, right? That's the high probability. What typically occurs after a correction, right? Well, I'm going to give you a clue because we can just go back in time with Bitcoin, and we can look at it. We can look at it. This was a correction, especially in hindsight. This was like an ABC correction. What occurs afterwards? Well, it's a continuation of the prior trend, right? Then we hit all-time new highs. When we look at the 2017 bull run, if we can really, really zoom in and look at it from this angle over here, we got this bull run, and then we had a correction. What was the correction? Well, it was a long correction, right? It was a long, deep correction, and then another correction over here. What did we get? We got a continuation of the prior trend. But not only do we get a continuation of the prior trend, the market expands to the next adoption cycle. It's called a wave 3, right? A wave 3. And then what typically happened? Boom, we had this amazing impulsive sequence. So what we've got with Bitcoin, and this is really, really important to understand, really, really, really important and powerful to understand, is it looks like we've got this 5-wave structure unfolding with Bitcoin. That's already happened. This was the November high, followed by a 3-wave clean correction. It's pretty clean. Look at this over here. Doesn't get much better than this. A, B, C. What typically occurs next is a continuation of the prior trend. We go, well, Jigir, what is the prior trend? Well, if we keep it really, really, really simple, the prior trend on a macro degree is this, right? If I just make this green, just so it's really, really clear. So then what am I saying? I'm saying long term, 6 months, 12 months, 24 months, 36 months, is we're likely to see Bitcoin. So it might be a bit of short-term pain, but we're likely to see after this correction finishes over a series of a number of months, is all-time new highs, but the market will expand bigger than the previous 5-wave sequence. That's just the way markets play out, whether it's Tesla stock, whether it's Amazon stock, whether it's gold, whether it's the Forex market, but especially cryptocurrency and Bitcoin. So just to kind of give that as a bit of, the next few weeks, maybe not so great. It's going to be a lot of fearful talk, a lot of fear, uncertainty, and doubt, a lot of panic selling over here. And we can short that and make money from that. But after the correction, we want to be aware longer term that we're probably going to hit past the 6-figure mark on Bitcoin. It's pretty inevitable. Big institutions have not even got involved yet because of regulation. And when that comes in, we're probably going to see that market. Let me just clean this up now because we've got tons of arrows, right? Tons of arrows, right? But just to keep it nice and clean. Let's clean this up as well. So just to re-emphasize, short term, from a trading perspective, trading Bitcoin sideways to down, that's what it looks like. Minimum expected outcome. But then after this expected outcome, to see a continuation of the market resuming the prior trend prior to November 2021, right? 2021? We're in 22 now, right? Yeah, we're in 2022. There you go. So that was a detailed analysis. But if you like daily detailed analysis, it's like 2-minute workouts that I do with Bitcoin. Join me in the R15 Crypto Gym. It's phenomenal. And we literally go into detail. It's £1 for 30 days. Just check it out. I think you absolutely love it because we're getting some phenomenal feedback. Great, really, 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 really great feedback. So like, subscribe, hit the bell notification, give me your support because I'm bringing you my 15 years of experience with Bitcoin. And, one of the big things that you should consider doing is stop watching the news. Stop watching the Twitter stuff on Bitcoin, the news on Bitcoin and cryptocurrency, because it's all noise and it's designed unconsciously to throw you off. So I deliberately do not watch it, especially when I'm doing technical trading. Right, let's finish on a quote. I don't want to do one from my book, but I'm going to do one from, it's one of my favorite quotes. I like it. So it's from a book called Black Box Thinking. It's a business book. And it's this: beneath every success is a mountain of necessary failure. So whether you're the top athlete in the world, whether it's trading, whether it's your profession, to get great, you have to allow yourself to fail and to learn. And the learning occurs the fastest when you get it wrong. So when you join the R15 Crypto Gym, we're going to do daily detailed training. You got the bootcamp. We got some, more advanced courses that you can upgrade to and everything else. And we're launching some other very, very exciting things. But my thinking is failure is a secret ingredient. Not that we failed deliberately, but failure is a secret ingredient to success. So that's all part of the art and the science of trading and winning in the game of trading. So join me tomorrow for the Bitcoin workout in the R15 Crypto Gym. Hopefully I'll see you there. We do some other workouts as well with BNB and Solana also. All right, see you soon.